Hello there. Welcome to the Money and Markets podcast with me, Kuzi Sharara. So, on the Money and Markets podcast, we talk about all things about investments. That's segment number one. The second segment is about financial literacy. But today we are going to focus on the first segment, which is about investments. And in today's episode, we want to decode the delisting of Old Mutual Top 10 ETF. So that's the Old Mutual Top 10 ETF, which was listed on the Zimbabwe Stock Exchange. But for reasons we shall talk about later, it has decided to delist from the Zimbabwe Stock Exchange. So today we are diving into that recent development of the delisting of the Old Mutual Top 10 exchange traded fund from the Zimbabwe Stock Exchange, with effect from the 17th of January 2025. Already it has stopped trading, and we want to see what are the implications for investors, and we are here to explain exactly what happened and what it means. So stay tuned on this Money and Markets podcast with me, Kuzi Sharara, and don't forget to subscribe to this channel. So let's start with the basics. An exchange traded fund, or ETF, is like a basket of different investments, securities, such as stocks. It trades on a stock exchange just like an individual stock, like an individual company. The Old Mutual Top 10 ETF tracked the performance of the top 10 companies listed on the Zimbabwe Stock Exchange. However, after some of the initial top 10 counters moved to the Victoria Falls Stock Exchange, it became difficult for the ETF to track their performance, resulting in tracking errors. Hence, the decision to delist or to voluntarily terminate its listing from the Zimbabwe Stock Exchange. So that's what we are going to be talking about here, especially now in terms of the implications. So this decision was made at a meeting it was an EGM on the 12th of December, and it has triggered a process governed by the Zimbabwe Stock Exchange listing requirements and the Securities and Exchange Act of Zimbabwe. So the ZSE received permission from the Securities and Exchange Commission of Zimbabwe to proceed with the delisting of the Old Mutual Top 10 ETF. This meant that from the 17th of January 2025, units of Old Mutual Top 10 ETF could no longer be traded on the Zimbabwe Stock Exchange. They will no longer exist on the Zimbabwe Stock Exchange. If you hold them, you can't trade them anymore. It's no longer possible. Now, what happens to the investors who held units in the ETF? This is where it gets interesting. So the ETF will be dissolved, and its assets will be distributed to the unit holders. The method of distribution depends on how many units an investor held. Maybe you had 100 units, maybe you had 1,000 units, maybe you had 10,000 units. So it will then determine how the units, how the whole process will be done for you, depending on the number of units you had. For unit holders with less than 1 million units, so if you had less than 1 million units, the process is straightforward. The fund's underlying assets, which is the stocks it held, will be sold. So they'll sell the delta or whatever they will sell. The proceeds, after deducting costs like brokerage fees, taxes, and other expenses, will be distributed to you in cash. So you get back the cash. Importantly, the cash distribution will be in the currency of the underlying assets. So if the stock was listed on the Zimbabwe Stock Exchange, we all know the stock exchange trades in the local currency. So the distribution will be in ZiG, that's the Zimbabwe gold, the local currency. If the underlying asset was listed on the Victoria Falls Stock Exchange, then the distribution will be in dollars. So if they sell delta, you get in ZiG. If they sell INSCO, you get in US dollars. So that's how it's going to be done. So the calculation of this cash distribution involves several steps. So you need to listen carefully so that you understand. So first is the net asset value of these stocks. This is calculated by subtracting the ETF's total liabilities, if any, from its total assets to get the net asset value. This is the liquidation process. So this is the cash received from selling the underlying shares minus transaction costs. So if they sell the shares, then they subtract the transaction costs, and then they'll get the total cash available for distribution. This is the liquidation proceeds minus liquidation costs. That's the cash distributed that they're going to be distributed. And then there will be cash distributed per unit. This is the total cash available divided by the total number of outstanding ETF units. So they will have the cash and then they will divide. Then the individual unit holders distribution. This is the cash distribution per unit multiplied by the number of units the individual unit holder owns. So they will take the cash multiplied by the number of units that you have. So for unit holders with more than 1 million units, Tampotora, those with less than. Now, for those with more than 1 million units, the distribution method is different. You will receive your distribution in scrip or in shares, meaning you will receive shares of the underlying assets directly. If the ETF had delta in score, you will get those shares. This aligns with how these larger investors initially invested in the ETF. The number of shares they will receive will be proportional to the number of ETF units they held. So while the transfer of these shares is exempt from capital gains tax at this stage, unit holders will be liable for capital gains tax when they eventually sell these assets. So when you get these shares, you're not going to pay any capital gains. But when you eventually sell the shares that you are going to get, you will be liable for capital gains tax. So the distribution of shares also involves some calculations. Remember, when we spoke about the cash aspect, we had some calculations we had to do. Now we are talking about the scrip or the shares aspect. There's some calculation. So this is calculated by the percentage. This is calculated by dividing the number of ETF units held by the unit holders by the total outstanding ETF units multiplied by 100%. So let's break it down. Distribution of underlying shares. The number of shares each qualifying shareholder receives is their ownership percentage. So if you have 5% multiplied by the total shares of each security held by the ETF. So if you have 5% multiplied by the total of the shares. Fractional shares, if any, will be paid out in cash. So if you have got fractional shares, a fraction of a delta share, a fraction of an INSCO share, it will be paid in cash. So in summary, let me summarize this. In summary, the delisting of the Old Mutual Top 10 ETF is a significant event that involved a structured process. Unit holders will receive their share of the ETF's assets either in cash or in scrip, which is in shares, depending on the size of their holdings. This process was overseen by the ZSE with the approval of the Securities and Exchange Commission and that of the shareholders of the ETF, who had to vote in an EGM, ensuring a fair and transparent distribution to investors. So this is how the whole thing went by. If you still need more information, I think the circular to shareholders is still out there. You can look at it. The ZSE has also released a statement that you can look at it. So that's it for this episode of the Money and Markets podcast, where we're actually looking at or decoding the delisting of the Old Mutual Top 10 ETF from the Zimbabwe Stock Exchange, with effect from the 17th of January. So that's the Money and Markets podcast with me, Kuzi Sharara. And don't forget to like my page, to subscribe to my channel, and also hit that notification button so that when we post other podcasts, you'll be able to see what we would have posted. Until next time, it's bye-bye.